Thank you, Evgeny, and thank you for having us as well on this session. I think, I haven't seen so many people at the same time on a ecosystem call. So, this shows how vibrant the near ecosystem is. Awesome to see this level of interest on institutional products. So, look, thank you everyone for having us, and I've got a few of my colleagues as well on this, and we're very excited to be developing on the near infrastructure. I just want to sort of, before jumping into RWAs and what we're doing specifically, I want to sort of talk a bit about the history first of RWAs because it's like for the last few years, RWAs have just come into everyone's perception now. That everyone's quite excited by all this discussion of RWAs, but I remember that 10 years ago, when I first started coming out of capital markets, I started to create this crazy idea where we developed the first concept that at the time we called a crypto security, and we tokenized a security on Bitcoin blockchain. And I don't know how many of you are familiar with colored coins. So colored coins was this first concept where Vitalik came up with this theory that you could like create assets on Bitcoin, and these are just tokenized digital assets. But we did one of the first implementations of a tokenized security on Bitcoin. But also we said, look, you could tokenize cash at the same time, and through the multi-sig on Bitcoin, you could do like delivery versus payment. So that was probably one of the first ever industry implementations of a tokenized security and on-chain settlement as well. And that was quite exciting. And that's when I essentially started a journey. And after that, around the end of 2015, we did one of the first implementations. So this was jointly with Consensus at the time. We implemented one of the first use cases of a catastrophe swap on the first Ethereum implementation. And that was like what nowadays is falls into the category of DeFi. And that you can find already, still to this day, you can find a presentation of that online as well. So these are the kind of things that I've been sort of playing around in from the early days. And then, from 2015, 2016, all the way to 2020, we created tokenized securities in every field, debt capital markets, money markets, and all this kind of stuff. But then a few years ago, what I thought was, where is tokenization actually going? Because it's not going where we created the industry about 10 years ago. When we created the industry, it was a platform. You come to the platform, you do something, you negotiate something, and it deploys a smart contract, and you got a tokenized security. That's how tokenization was done in the old days. And to be quite frank, it hasn't changed since the last 10 years. There have been some hybrids nowadays where you got the Web2 structure with the platform, but where the token then comes out, you can compose it with other protocols on chain. So you've got the Web2 side where everybody comes to the platform to create an asset, but then you can take the asset and do something else with it. But if you want to redeem the asset or take it back out, you still have to come to the platform again as well. So everything is controlled by this one on-ramp and off-ramp, even though it's a hybrid sort of a platform and protocol. But the question that we asked a few years ago was, what does the future look like? Can you create a tokenized issuance and distribution infrastructure that is not dependent on a single platform? Can you create a decentralized, regulated securities infrastructure? And that's essentially what we wanted to create. And that's what I'm going to go through today, what Libre is doing and why, working on the near ecosystem is actually an advantage for us because of all the innovations that are developing, that are actually taking place. And as we believe in the future, this kind of RWA infrastructure is going to be operated by agents, and why the near ecosystem is optimal for that as well. So, we'll talk a bit about all of this, and a lot of the history I've already sort of explained to you, but I'm trying to sort of explain now where the world is going, because ultimately we're at around 8 to 12 billion of RWAs today, depending on how you measure the industry. And we do believe that, on the conservative estimate, the industry is going to grow to about 1.3 to 4 trillion. And that's only the organic growth in the industry based on using the money markets for reserves in stable coins or private credit as collateral, etc. So things which the ecosystem is going to use itself and develop and grow itself, and how the treasuries are going to manage their own wealth on chain. So this is conservatively where I see the industry being in about 3 to 5 years, about 1.3 to 4 trillion of RWAs. Now, obviously, the optimistic growth is like 10 to 30 trillion. This is like where capital markets start adopting this infrastructure, securities come on chain. This optimistic growth, I don't think is going to happen in the next 5 years. However, it could happen in the next 10 to 20 years. But even if we stick to the conservative side, on average, 2 trillion growth in the next 5 years is phenomenal. And if that's what's going to happen, I think it's quite easy to see it's going to be a revolution, because ultimately this will become measurable and comparable to the entire crypto industry is today. And the unlock to achieve this is going to be a few things. Faster time to market. How quickly can we get RWAs on chain? Because if you have to spend months structuring things, documenting things, and then getting the tokenized assets on chain, then again, it's not going to happen fast enough. Secondly, can you manage the legal and the regulatory compliance in a way that is effective but efficient? Because yes, you can be effective, but if it's a pain for people to comply, the users are just not going to care, because they're not going to spend months going through onboarding and checking when they can't even do anything with those assets. And then can you ensure that the access to the tokenized version is as cheap or cheaper than the off-chain version? Because why would you pay 50 basis points for a money market product on chain when you can get it for 10 basis points off chain? Why would you pay for something 5 times extra on chain? It doesn't make any sense. So the cost has to be effective as well on chain. So ultimately, these 3 things: can you get something done quickly? Can it be compliant? And can it be cheap? But finally, can the asset have utility? Can you use the asset in a way that gives it utility? So, for example, can it be a reserve for stable coins? Can it be used as collateral for collateralized lending? Can you use it in a DEX for trading? These are the things that we have to achieve for these RWAs to be really, really useful in this industry and to drive this conservative growth to about 1.3 to 4 trillion. Now, look, as I said, where is the industry right now? 10 years ago, we created the platform economy. People come to the platform, they create an asset, and that's it. You have to do everything from the platform. Today, we're seeing this hybrid. You come to the platform, you launch a token. Yes, you can use it in other places, but ultimately, you still have a central control point, the platform. The protocol economy is that it's not just a single platform. It could be any platform. It could be any platform coming to this infrastructure on chain that's decentralized. And ultimately, you can issue, you can distribute, and then you can interact with other chains. Ultimately, this is the true protocol economy of where the platforms are for tokenized securities. And if you think about how capital markets operate today, this is exactly how capital markets operate today. The capital market is quite decentralized. There's JP Morgan, Goldman Sachs, there's broker dealers, all these institutions. They don't necessarily trust each other. They require users to be onboarded in their own institutions, and they allow interaction with each other, with the market, with other exchanges, with other facilitators, etc. It's a pretty decentralized ecosystem, capital markets. But can we create a similar decentralized ecosystem on chain that works in harmony And what does that look like? This protocol economy is what Libre is developing. And on this is where we're seeing the world going. We're seeing everybody is developing T-bills because they're the fundamental building blocks of capital markets. They're essentially the source of money, and debt, a majority of the debt in the world. And ultimately, on top of that, then you get things like private credit. That's what's going to be the next big thing as interest rates go down. And we're already seeing the adoption of private credit. There's been firms like Hamilton Lane that we're going to talk about. Apollo is coming, Mubadala, and all these kind of organizations are coming to deploy their private credit funds now as well as the money markets. And what we're going to see specifically in the next year or so is the crypto native strategies. This is where treasuries like the NIR Foundation and other treasuries as well, they hold a lot of crypto. Can you create and use these crypto assets and add some utility to it? Can you create a fund around it? Can you actually develop something that creates a strategy that other people can come and join in as well? And this is essentially the kind of innovations that we're going to see, that ecosystems going to develop around these kinds of strategies and products developed on chain from the users for the users. So this is where the world is going. A protocol economy that provides access to things like T-bills, private credit, and crypto native strategies that anyone can design, develop, and allow access to in this ecosystem. The majority of players out there are operating here. Libre is developing a protocol. We're developing an ecosystem, and ultimately, we're trying to be as open as possible and to be a protocol that allows anyone to come in, issue, and distribute assets. I'm not going to go into deep detail. I'm conscious of time, but ultimately, everybody, probably has seen where the industry is around. Everybody's issuing money market products, etc. The majority of these are funds. Even the money market, even the private credit are all funds as well. So funds are normally issued through a fund structure. And every time you access a fund, it goes through some kind of feeder fund. And these feeder funds have a number of components. Now, whenever you want to distribute and sell this, the dealers interact with a feeder fund. They onboard users, subscriptions go in, the admin executes this, you do the payment, and then that updates the share register. Now, when the majority of times, when everybody talks about tokenization, all they talk about is tokenizing the share register, but they forget all of this stuff is on chain, off chain. But if you've got all of this off chain, you're not really doing anything other than just creating a share register. But then, all the cost that exists is off chain. And then you're adding extra cost. You're creating a tokenized register. You're creating this structure here, but you're adding that on top of existing feeder funds and infrastructures out there. So you're just increasing the cost for the end users. What Libre is doing, it's essentially taking all of these feeder funds and it's saying, you don't need these feeder funds there. All you do is you have a complete on-chain infrastructure and all the orders go in there. Everything is updated on this infrastructure. You can do payments on-chain. So essentially what happens is that these feeder funds can completely disappear because all your infrastructure is on-chain. In the future, we see funds connected to the distribution channels through our infrastructure, which is a public infrastructure. And this is essentially what we've done with the NIR Foundation, with that we've deployed this infrastructure, we've allowed access to these funds on the NIR network. But essentially, I won't go into all the details, but what we enable is the share register to be on-chain, all the workflows for subscriptions and redemptions, the instrument legal rules and the logic, and the distribution compliance all on-chain. And also the assets can be composable with other DeFi infrastructure in a compliant manner. And we're putting all these things in place. I'm not going to talk too much about cost. So just to now quickly give a summary of where we are with the product. As I highlighted, we're already launched with a primary issuance. We've got a number of funds now on chain. These can be issued and distributed to a number of, directly to clients or through other distribution channels that we're working with. But then these assets can also be utilized for collateral. And we've now relationships with a number of providers like Nomura and Fab to provide the liquidity. And by the end of this year, we'll have about 500 million of liquidity to be able to lend against these assets. So if you have even 100K of a private credit fund like Hamilton Lane, you'd be able to have a loan to value on chain of 50 to 75% on your assets. So you could be earning 10% and then also generating liquidity to get access to the cash at any time. And similarly with the money market and other products as well. So this is the kind of thing that we're driving. And these are just some of the assets that we're launched already and what's coming. And that's about 10 more coming over this year as well. But just in final couple of minutes, just in terms of the omni-chain strategy and specifically with the near land network, is we've got the Libre app chain. It's purely an app chain designed for dedicated management of our protocol, just with the complexity of all the compliance and the legal logic. But ultimately, we allow the deployment of subscriptions and redemptions from the network directly to take place, but all the TVL gets minted and issued on the near network. And utilizing the near's technology of chain signature, you can also control the issuance and distribution on other networks as well. So we're operating on quite a few land networks right now, and ultimately we're working with the Near Foundation and with chain signatures. We're also working on the possibility of allowing the control of the assets on any other network through the Near chain signatures technology as well. So this is essentially where we're working towards this year. We've already got 200 million of AUM. We're driving now the deployment of collateralized lending. We are going to have our protocol TGE by the middle of this year. And the protocol TGE we're going to be announcing very soon. And ultimately, we're going to go towards a complete public access by the end of the year with the launch of the app chain next year. But over this year, we want to get to the point of utilizing the near chain signatures to allow interaction across other networks from the near network as well. This is essentially what we've now achieved, because the 200 million or so of TVL that we got across the networks is that the foundations we're working with across the networks, they like the quality of our assets. We're not the kind of company that just onboards assets just for the sake of onboarding. We only onboard high quality blue chip assets, and we deploy those assets straight onto the network. So it increases that TVL, and it allows the chains and the foundations to manage their liquidity, their treasuries and portfolios on chain. But also they can now utilize those assets on their network to create utility, to get the liquidity. So this is where we are today. We've shown the product works. We're launching on a public access. It's going to be launched over the next month. So anyone will be able to access it by March. At the moment, we only controlled access with a few of the foundations and institutional players in this industry. We've already done the market validation. We've got 200 million of AUM and TVL across the networks. And we're launching utility through collateralized lending and the wrapped assets, so you can trade them and use them in DEXs as well. We have done all of this over the last year, and we're doing the TGE the middle of this year. So it's an exciting time to be working with the Near Foundation on some of the innovations as we go forward. I'll pause there. I've talked for probably over my time. Happy to take questions and discuss further, especially interactions and composability with other protocols on the Near network would be amazing to discuss as well.
Yeah, thank you so much. I think there was a lot of alpha in this presentation. I have to admit I was not aware of you launching your own app chain, and I think it's quite also a novel architecture, leveraging new technology to really spread and have this like composability or interoperability with other networks. That's super interesting. Thanks
And
for sharing
Maximilian,
that.
Maximilian, just a key thing of that's being made possible through the chain signatures technology as well. So the whole interaction of that app chain with other chains is fundamentally connected to the near network as well with the chain signatures.
Maybe as a question, since you are like you have a quite wide array of different financial assets that you're tokenizing, what's your general view on I call it like pecking order of tokenized assets? So we've seen stable coins, we've seen the money market funds being tokenized. What do you think will follow next? Michael also shared his perspective, and he found the commodities space particularly interesting. What's your view on which asset class will follow next when it comes to on scale, like on at scale tokenization?
Yeah, sure. So I think the money markets have a huge growth opportunity in the next 2 years, and I'll tell you why. Because the money markets are going to underpin the reserves of stablecoins. We're going to see a theme that thematics of decentralized stablecoins emerging. We're going to see things like Tether and Circle really jumping into creating on-chain minting of their assets. And that's going to be made possible through on-chain money markets. And that's going to be a huge theme. As a result of that, we're going to see the reduction of the minting from Circle and Tether themselves, but direct on-chain minting. As a result, it's going to drive probably 200 billion of a TVL of money markets across the networks. And that's going to be solely for stablecoin minting. And that's going to happen guaranteed over the next couple of years. Now, on top of that, as interest rates go down, we're going to start seeing an increase in uptake of private credit. So private credit is going to be an awesome kind of asset to hold because it's easy access, short redemption cycles as well, and also is good returns and good yields to offset some of the reduction in interest rates on the money market side as well. And I absolutely agree. Commodities is a huge opportunity. And I know firsthand as well a few organizations that are launching market neutral, commodity based stablecoins. And that's going to be a huge amount of engineering, financial engineering around commodities on chain. And I think there's a huge opportunity there because what many people don't realize is commodities have a huge amount of instruments that already exist in a traditional market around like derivatives and markets, quite deep derivatives markets, spot markets, etc. If you start tokenizing all this and structuring these, you can create very good structures on chain that users on chain are already familiar with how these things operate, as they've been using things like cryptocurrencies, etc., and developing market neutral strategies, etc. It's going to be an easy leap for them to go into these commodity markets on chain as well. And that's why we're going to see a very significant amount of engineering on chain around that. So yeah, I think money markets, huge upside still to go. And we're going to see probably like a 100x increase of where they are today. We're going to see the next big thing in private credit. Then after that, definitely commodities as well.
And what's the timeline on these developments?
I'd say the next 2 years, we're probably going to see RWAs going to at least 2 to 300 billion in the next 3 years. And then we're going to see an explosion up to 2030.
And maybe one last question that is quite fresh now entering the chat from Andreas. Could you please give an example of RWAs you are able to bring on chain and following? Which jurisdiction are we talking about? Machinery, toolings, real estate, companies, cars, and so on. Sorry for asking. I might have missed this in the presentation.
Sure. So yeah, we are fully compliant. We ensure that all the checks are transparently on chain in terms of jurisdictions that these assets are allowed to be distributed, the types of users, etc. So right now we only serve professional accredited investors or institutions. we are going to open it up to the mass affluent accredited types as well very soon. And then ultimately, we're only focusing on various jurisdictions like Europe, UK, Cayman, Hong Kong, Singapore, and a few other jurisdictions as well around Asia. We are, and again, a sneak peek, we will be planning to go into the US probably later this year. So we are planning that. Right now, the focus is to drive uptake in the rest of the world and slowly expand the user types and jurisdictions as we go. And obviously, we're open to demand. If somebody says, you know what, I've got 100 million to deploy and I'm in X, we will make sure they go front and center to the queue.